Well, hey, everybody. I travel, speak, teach, and we use a product called Slido, which allows our audience to ask questions. During my presentations, I stop and answers the questions, but we don't get to all of them. Well, we have a post-event episode called If I Had More Time, and I answer these questions. And so Craig Fatt's with me here today,
Hello.
and he's got the questions. I have not seen these. We've not pre-rehearsed this, but I found some more time. So let's go. If I had more time. Oh, wait, I do. Let's answer some questions.
And so these are all investing questions. Okay, so we'll see how many we get through. Cut us off when we go too long, but let's jump in. So question one, what is a good credible source to learn more about buying stocks?
There's several good credible sources. I think the first place to start is go to Investopedia. Investopedia it's like an encyclopedia, but it's about investing.
Yeah.
And it has some good education there on how to do that. A second place to start is if you have a 401k or an IRA, 403b, 457 provider like Fidelity, Schwab, Vanguard, they have education that's available on how to buy a stock. And also in Fully Funded Life, I teach buying your first stock. We have a buy your first stock challenge. And I actually demonstrate how to buy a stock on each of the big platforms.
Yeah.
And so those are three good places to start.
Yeah, that makes sense. I thought it was interesting.
By the way, there's no sales charge to buy a stock, no sales charge to sell a stock. You can buy fractional shares. You can buy stock slices at Schwab for $5.
Yeah, yeah.
And Fidelity came out with, get this, slices of stock trademark.
Oh, wow.
Stock slices. There's slices of stock, and you can buy them for $1 of like the most 500 most common stocks. So don't let the lack of knowledge prevent you. Just start, buy $5 worth and start learning.
Well, that's what I thought was interesting about the question is it wasn't specifically how do I know which stock to buy?
Yeah.
It's how do I buy a stock, which is,
Yeah.
super important. You got to know how to do that. So absolutely. I would recommend the how to buy a stock course. We have just walk through it, exactly how to do it. And there's a bunch of different platforms. So, all right. Question two in investing here, are I bonds beneficial to have?
I bonds can be beneficial. They are indexed to inflation. They're offered from the United States Treasury. You may or may not know this. I don't know if you know this, but the United States operates as a debtor nation. We spend more than we make. And so we borrow money by borrowing money from anybody who will buy a Treasury bond. And the inflation bonds, they're indexed to the inflation rate. They can be excellent. At times, when inflation was really running hot, they got up to over 9.5% on an annualized basis. You can check out the current rates at treasurydirect.gov, and that's where you can buy and sell all types of Treasury notes, bills, or bonds, including I bonds or EE savings bonds. They can be excellent. I don't view them really as investments as much as I view them as savings. They're not going to go down in value. They're indexed to inflation, so at least keeps you at pace with inflation. So it's an excellent place to store reserves.
A little bit better than a savings account.
Yep.
But you're not necessarily fully into investing that money necessarily.
That's right. There's no risk.
Yep.
Unless the U.S. government defaults on its debt, in which we have much larger.
Yeah, we have a couple more.
Worldwide is.
Yeah. Question 3 here. As a 14-year-old, how can I earn more money for spending and invest it in stocks?
Yeah, I think this is a great question. This kid's going to be an entrepreneur. This is what I know. Yeah, I don't know what the percentage is, so I'm just going to make up a percentage based on my feelings.
Okay.
This is about 5 to 10% of teenagers starting at about 13, 14. You start seeing them bubble up. These people have a natural inclination to investing and entrepreneurship, and they're really saying I have an appetite for risk.
Right.
And so say the question again.
Okay. The question was, as a 14-year-old, how can I earn more money for spending and invest it in stock?
There we go. So this is great. So this person is asking the question, but they're going to be good enough on their own. They're going to figure it out. But we can give lots of ideas. One is ask your parents if there's extra work that you can do for them and earn some income with it. Ask the neighbors, become industrious, start a lawn mowing business, start a hedge trimming business, a leaf raking business, a snow shoveling business. These are the most common ways that kids earn money around the neighborhood. Then you can, there are some places that will hire as young as 14 for like 2-hour segments. Like certain fast food restaurants will hire at that young of an age. It has to be within certain hours that you have to work. If your family has a business, ask if you can work for the business. I started working for my father when I was like 6. And, I think my first jobs was like picking up random rocks. He built houses, and sometimes they were putting rocks in like septic fields, and he didn't want rocks all over the yard. So we'd go pick up rocks and put them in a wheelbarrow.
Come on.
And, I didn't get paid a lot per hour, but I earned something. And you can start a custodial trading account. Your parents are going to have to help you. Your guardian is. But you can open that account at Schwab, Fidelity, anywhere, and start investing.
And then going back,
you can use
slices is a great way to do
stock slices. My son does it. And I was also going to say Greenlight has the platform for kids and managing finances, has a kids invest section to it as well.
Okay, awesome. No, that's really good. All right, let's jump over. We're kind of switching gears a little bit here. So if you have a large amount of equity in an investment property, is it smart to cash out and reinvest? If yes, what would you advise to invest it in?
This is a great question. So this happens, right? You buy a rental house, or you bought a house. It was your first house, and it was one of those 2.5% interest loans. And then it exploded in value, and the time came where you're like, this house isn't fitting our family's needs. You buy a bigger house, but you're like, I'm going to keep this house and rent it out. And then you realize, wow, we have a lot of equity in that house. Let's say you have $300,000 equity. Equity being defined as the difference between the sell price and whatever obligation of debt you owe, what you get to take away from it. So I always look at it this way and say, there's 2 questions that I have to ask. One is, with the equity that's in the house, what could I earn risk-free with that money? So I could earn 4%. Today, I could earn 4% risk-free treasury bond or savings account. So if I had $300K there, that's 4%. That's $12,000 a year. That's $1,000 a month.
Yep.
Okay. So am I netting that much per month in rent? That's the question. And then the second question is, if I did sell it, if I did do what they said, I need to have an answer on where I would redeploy it.
Right.
And that's what they're asking. Where would I redeploy it?
Yeah.
Well, you could redeploy it into stocks, bonds, mutual funds, and within IRAs and certain tax protection. Now, there's limits on how much you can put in there every year. So that's a problem. Or you could identify another property, a similar property. Let's say you had a single unit house and you wanted to buy a 4-unit. You could do something called a 1031 exchange. It's called a Stark exchange. And there's a specific legal procedure for it. You have to close within 180 calendar days on the new property from the date you sold the other one. But that money, that equity will transfer tax-free into the new property. And if you look at that rate of return and say, hey, that's much better, then giddy up, go do that. But I would not just sell it, just have the cash on hand. I've got to have a place that I'm going to redeploy it, because it's very rare that a savings account will long-term keep up with what a rental property will do.
Yep.
But again, that's a great problem to have.
Yeah.
I have a bunch of equity. It's in a rental house.
Yeah. What do I do?
Should I keep it there or do something different?
Better versus best.
Yes.
Okay. We went from 14-year-old question. Now we have a 60-plus-year-old. So we're all over the map here. What's a good investment opportunity for a 60-plus-year-old? I think a couple other questions have to be answered.
I love this question. I'm not a real good person to ask, because
not far.
I'm a risk person. Excuse me. Oh,
you want me to re-ask?
No, I don't need you. Craig has very much insulted me, but here's the deal. I just have a rule, and check with me in a long time from now when I'm 60. But I just have the rule. It's the Joe rule.
Joe rule.
They should have their own rule. You should have a Craig rule.
Craig rule.
And it's the 5-year rule. Do you know my 5-year rule? What is my 5-year rule?
If you don't need the money within 5 years, then you can invest it or you should invest it.
Yeah, I would put it at risk. I'll take
Put it at
risk
risk,
with it.
yeah.
But if I think I need it in the next 5 years,
I'm
I'm putting it in safe mode.
Mhm.
I don't see how that changes when I'm 60, 70, or 80.
Yeah.
I just don't see how that is. My father, as we record this, is 86.
Mhm.
He's still investing. And he's investing money he doesn't think he'll need in the next 5 years. Now, I don't think he has said he has the RA Single 5-year rule. I think he's having the I'm trying to make it the lunchtime rule.
Yeah.
And then we'll see about dinner. But he's a risk taker because he has margin
Mhm.
and he secured the short-term margin, so it allows him to take risk long-term. So 60-year-olds, let's put some handles on it. You can invest in stocks. You can invest in mutual funds. You can invest in index funds.
Mhm.
You can invest in a rental house. My dad still owns rental houses. He's still looking to buy. The last time I was home for Thanksgiving, he was talking about building a rental house. Yeah. So I think the fun, if some people don't view it as fun, but fun for me is the exploring of taking something and gambling on it and that risk of whether or not it's going to work or not. Mm-hmm. But making sure you're only using dollars you don't need in the next 5 years so you're not putting your livelihood at risk is really important. Mm-hmm. So that's what I would share for the 60-year-old, that I am far away from being at age. And by the way, they are not old either. They're very young. 60 is very young.
Well, thank you guys so much. That was, if we had more time. We are out of time, but we will be answering more questions in the future, so stick with us, and we'll get to all the questions, we promise. All right, we'll see you next time.
Awesome.